What is a prepaid expense? How do prepaid expenses impact operations? Are there any downsides to prepaid expenses? Let's talk about it. First, let's take a quick look at the definition of prepaid expense. A prepaid expense is an expense that has been paid out in advance for future goods, services, but not yet incurred, received, action, or obligated. So, for example, an organization that pays for insurance for the coming year or pays half of a printing order in advance. The insurance is a prepaid insurance expense, and the printing is a prepaid printing expense. Both will be expensed or amortized in the future when the goods, printing, or services insurance are realized or incurred. In other words, prepaid expenses are a current asset of an organization where it expects to receive future goods and services for funds paid in advance, or the organization would expect to receive back these funds if the goods or services are canceled or not delivered. Prepaid expenses are recorded as a current asset and listed on the balance sheet under Current Assets section. Prepaid expenses is a part of accrual-based accounting practices, where revenue is recorded when earned and expenses are recorded when incurred. Advance payment for future goods and services will be recognized when those future goods and services will be received or have a right of use, but not before, thus residing as an asset on the balance sheet until the future realization event happens. So let's take a look. How does prepaid expenses impact operations? Well, first of all, in the normal course of business, we will come across and have prepaid expenses. That's a given for for-profits and nonprofits. But the purpose of prepaid expenses is to correct timing imbalances to match programs to activities. So a prepaid expense helps align expenses to actual activities, programs, and operations. An important point for me is healthy organizations will have adequate cash flow to support prepayment of goods and services. And this, from a vendor's point of view, is to be expected. They expect and like to see early payments. And these early payments can result in savings, discounts, speed of order fulfillment, and even other commercial benefits, and just the impact that the vendor has and feeling has about working with the organization. Are there any downsides to prepaid expenses? Well, there are. First, it requires extra available cash to prepay for these things. It can disrupt cash flow. It can be an opportunity cost where this cash could be used for other purposes. The goods or services might be many months away, so that cash could be tied up for a long period of time, even up to a year. And finally, like with any accrual, there's a potential for errors and double payment down the road if we don't watch over it carefully. So to recap, prepaid expenses are goods or services or expense obligations paid in advance, but not yet received or incurred. It can have many positive impacts. On the other side, organizations that are tight on cash, it can be problematic. So best to plan to have prepaid expenses, but anticipate cash flow complications before making early payment. That's it for today. For more information, visit the website at SE4Nonprofits.com. Be sure to check out our video on accrual basis accounting also. See you next time.